Welcome to the Alternate View podcast, where we're demystifying the world of alternative investments. I'm your host, Matt Andrulot, Managing Director of Verdant's Capital Advisors and Head of Private Capital Due Diligence. Whether you're a seasoned investor or simply want to learn more about alternative investments, you're in the right place. Each episode, I'm joined by an experienced guest who has a wealth of knowledge about their asset class. Today, we're looking at the world of airplane lending and leasing. But before we get started, click your YouTube subscribe button or your favorite podcast platform. So let's get started. I have the pleasure of speaking with Jeff Rehm, the Managing Director of Flight Lease. Super excited today to have a conversation with him. Longtime friends, but we get to now speak a little bit about something I think is a pretty interesting asset class, being airplane lending and leasing. So hopefully he'll provide us some educational materials around what the asset class looks like, some who's investing in it, what different types of subsectors are inside of that asset class. It's not something that we talk about quite regularly, and it's not your traditional type of investment solution across the RA market or even in the multifamily office environment. But I think it's super compelling as a non-correlated type of asset that we would love our listeners and viewers to necessarily learn a little bit more about. So, Jeff, welcome.
Thank you. As Matt said, I'm in the aviation business. I've been with Flight Lease for 2 years. Prior to Flight Lease, I was at a family office for 20 years, Director of Investments. And as a Director of Investments at a family office, you're always trying to find new, unique investments. How do I move the risk dot up and to the left, finding the asset class that's very complementary to traditional assets such as equities and fixed income. The two founders of Flight Lease, Jeff Alexander and Larry Travers, I've known for a better part of 15 years. And we started investing at a family office about 10 years ago in their pre-fund investments, which is carried on to Fund 1 and Fund 2. And I joined them again to help institutionalize the process through Fund 1 and Fund 2. So happy to be with them. I'm very excited about the asset class, obviously. I'm very passionate about the asset class. And I would say to my wife, I probably should have been a pilot. My brother's a pilot, he flies F-18s. My dad was in the military, but still not too late. Maybe I will get my pilot license. We'll see what happens.
We'll find out.
That's right.
Excellent. Tell us a little bit about airplane lending and leasing. Like, what does that look like? It's a pretty unique asset class. Love for people to understand. We'll start at the high level a little bit, and then we'll dig down a little bit more. I'll ask you some additional questions around that, and hopefully we'll give people kind of an understanding and a little education on airplane lending and leasing and what they should be looking at.
So Flight Lease, we think we have a unique platform. Obviously, we've all heard of traditional aviation lending and leasing. From our perspective, in the aviation marketplace, there's always an opportunity for spread, and we identify that spread through various arbitrage opportunities within subsectors. And what we do, we try to contract in, contract out. So we're moving assets from Gen 1 operators to Gen 2 operators and locking in that spread. By and large, the leasing asset class is pretty commoditized. It's been around for a long time. New aircraft are going to the big players. That market segment is being serviced by big banks. And those big banks are lending to big operators such as Delta and American. And for us, we want to acquire those assets as they're coming off those primary operators, transitioning to secondary operators who only buy or only service or use middle life, how we define 15 to 20-year assets or used aviation assets.
Now, why would they not be like the primaries in buying new planes? Obviously cost, right? Like that's a component to it. But why are people looking to buy mid-life aircraft relative to, going to Boeing or Airbus or Bombardier or someone like that to buy their own?
Sure, cost is certainly a big component of that. Obviously, very expensive to buy a brand new aircraft. Although, typically, when you're a Gen 1 operator, you're buying in bulk. So you're buying 10 to 15 planes, you get a discount, et cetera. Secondary operators who tend to be smaller in nature, flying out of not as smaller countries as well, they can't really afford to buy 10 or 15 A350s. They'd much rather acquire the transitioning asset from off Emirates and so forth, where they're buying the asset at a discount, but they're still able to fly that fleet, that particular asset class. And they cater their fleet specifically around used equipment.
Got it. Is there a timing component to it as well?
There is. What we've seen historically, Airbus and Boeing, who are the OEMs, will produce a new variant or new asset type every 15 to 20 years.
Okay.
So as they do that, they pass off or incentivize guys like American and Lufthansa with massive incentives to acquire the new asset, pilot training, engine programs, et cetera. And when they do that, there's a set schedule of retirements as they're taking delivery of new equipment. So we'll often come in on a stage where we know an airline is retiring 10 to 15 assets over the course of 2-3 years. We'll individually acquire those as they come off the fleet, and we'll transition them to our customers. At the end of the day, it's all about our customers, right? If you don't have a good visibility into the customers, what their fleet demand needs are, and more importantly, not only are you acquiring assets, but really the big component that really I think sets us apart is you need to have that adoption of that asset into the secondary market. With no adoption, you're just buying an asset that could be sitting idle, earning no revenue.
Understand. And so give me the example of a secondary kind of airline. Like, what does that look like? Who are they?
They tend to be smaller in nature. We call them tier 2.
Okay.
But then you have a hybrid such as Delta. Delta will operate new aircraft and old aircraft.
Like a regional? Is that like more like their regionals or their smaller?
Correct.
Okay.
Correct. A perfect example. We have a couple aircraft on lease to Aerosucre, based out of South America, cargo operator. Been around for a long time, but they don't have 100 planes.
Yeah.
So we've provided them with several aircraft to shop cargo in and around the region. And that would be a perfect example. But are you a Delta flyer?
Yep.
You are. So have you ever flown a 757?
I'm sure I have.
That plane has been out of production for 20 plus years.
Really?
Yeah, and they're still flying them. And when you got them, you see that the bolts are kind of rusty, the windows are all scratched out.
Makes me feel super confident in jumping in a plane.
Well, the good thing about that, those aircraft and engines are constantly being overhauled. So it's not like you could fly these assets for 20 to 30 years.
Okay.
That's specific to the maintenance schedules that they have to abide by due to regulations and so forth set down from the OEMs and the FAA. I was saying earlier to your team, it's not like when you're driving a car and the check engine light comes on and you know what? I'll take it to the shop in a week or two. That doesn't happen here.
Yeah.
It's a very strict schedule on maintenance and overhauls that needs to be maintained, irrespective of whether or not that check engine light comes on or not.
Does that help you guys, like analytically, like valuation quantitatively? Like it seems like the airline marketplace, just in general, is highly quantitative, right? Like how many cycles and certain timing, and if something happens or it has to be checked, and it seems like everything's recorded. Like everything is recorded. Hopefully, giving you some insight quantitatively around, supply, demand, who needs what, when things are coming online, when things are being retired. It seems like it's a pretty open book from an information flow perspective, which is, I'm assuming, valuable in evaluating and sourcing and the supply demand curve as you kind of define it.
Yeah, while it's a heavily regulated environment, but it's also very data rich.
Got it.
So each of these assets, individual assets, whether down to the airframe, the landing gear, or the engines, has their own catalog book. Within that book, we have maintenance records: who produced it, who serviced it, who flew it, how many cycles, who the owners are, who the lessees are, et cetera. So with all that information, you can deduct, who was the potential adoption of that asset, who's flying this asset today, who's retiring it, who's going to take it on for the next 4 or 5 years. Typically for us, we like to have contractor cash flows. So we know what we're buying the asset for. We know what the end date is, and that end date is really specific on the cycles. So to give you an example, one cycle is one takeoff, one landing. So let's say an engine has a green time of 2,000 cycles. We have a pretty good visibility into what the current market rate is for those cycles. That is the cost per takeoff and landing.
Yep.
You monetize that out, or you annuitize that out, so you have a really good idea of what your cash flows are going to be over the timing of that lease.
Got it. So you're basically acting as the middleman between the big providers like Delta and the smaller providers, say, some foreign company that's a little bit smaller necessarily, and you're buying planes that you could provide to these other smaller providers depending on what their needs are.
That's true.
Is that pretty accurate?
Yeah, I think that's accurate, but I wouldn't say our customers are all small airlines.
No, I know. I was just using that as an example, but I completely understand.
Particularly, we're active in the cargo space.
Okay.
And cargo operators, from our perspective and from our customer base, are larger carriers, DHL, ASL, which is one of the largest cargo operators out of Europe, Qatar. Obviously, these other main operators have their own cargo fleets.
Yep.
And those guys, for us, again, it's all about the spread and arbitrage. So, relative from Fund 1 to Fund 2, the opportunity set changed post-COVID.
Yep.
We were very intensive and active in the narrow body space. Now we're in the wide body space. Those are bigger planes, bigger costs, bigger dollar amounts. And what you get from that is higher tier operators because they can only afford to fly the 777 or the 747-400 nose loaders, et cetera. For example, we acquired a 747 nose loader from an Asian operator, and we have it on lease to a European cargo operator, ASL. That's a very significant customer for us. Although we only have one asset with them, they're really tier 1 credit, and we hope to expand upon that relationship.
So credit's a big part of what you guys necessarily do, understanding who the lessor is, or who's leasing from you, or who's purchasing from you, or whatever it might necessarily be.
I think rule 1 in leasing is make sure your guy can pay you. So, we need to collect your cash flows, and so credit work is a big component of what we do in the underwriting process. All of us at Flight Lease, we're all investment trained backgrounds in private equity and other various avenues of finance. So. A lot of what we do is ensure that when we do put a plane out on lease to a customer, they can actually pay us. Got it.
And was that customer looking for that particular type of plane, and you guys were able to source it and find that, or did you already have it in your?
In that particular case, we already had some initial discussions with the operator of taking on that asset.
Okay.
And for us, that all comes back to knowing the customer.
Yeah.
If you're playing in an asset class with 200 distinct sub-asset classes, you're only trading in 5 or 6, so you really have knowledge on those 5 or 6 asset variants and who the operators are. When we do have a situation where we might need to reposition an asset, we already have the customer for it already because we're already trafficking in that asset. So it's an important component of what we do, and again, it all comes back to what the customer wants and needs.
There's that many sub-asset classes within airplane lending and leasing? Like you said, 200. I mean, that's a huge amount. Like, give me some examples of some. I mean, you gave a couple of examples of like what I would say would be traditional.
Sure.
Right? You own a plane, you're leasing it to an operator. Well, give me some of the other sub-asset classes that.
Well, everybody thinks that the whole aviation complex trades in this monolithic, 747 is one plane, and they forget that these assets, they're big pieces of metal flying around the world. They have different components.
Yeah.
So a sub-asset class could be the landing gear of one plane, the APU of another. The engines could be different from one model to the next. Those are just different asset classes.
Yep.
Even within the same family of aircraft, just call it, for example, the 737 Classic by Boeing.
Yep.
The latest generation is the MAX. There was the original, there was the Classic, there was the NG, and now there's the MAX.
Yep.
And all those components have different size variants as well, from 100 to 200 all the way up to 800 and 900. So the different size lengths, different size wings, different landing gear, different engines, et cetera, those are all be considered sub-asset classes. And in each of the fleets will design their operational flights in and around specific asset classes.
Really?
Yeah. So at any given time, they're trading in their individual micro subsectors. So it's not like one asset type of one plane will trade in every single plane that's that same model. Maybe a generation or two older, it's going to trade in the same fashion. It could be very different. And that's all driven by the retirement and adoption from aircraft from one operator to another.
It's very supply-demand driven, it sounds like. But it seems like it's an extensive length of time. I mean, it takes a long time to build a plane, right? Like you've got to provide an order to Boeing or, any of the other big manufacturers way in advance. And then they've got to be able to nail that actual production, which seems to be an issue.
Challenge number 2.
At certain times, right? So they're planning like multi years in advance with regards to what they need for new supply, it seems like, which is pretty directed, meaning like you can see that what they're trying to retire, and then what they're going to have coming online, and then what that's going to look like for you guys.
And that visibility provides us with a window to stage investments. We're not often acquiring 30 aircraft at one time.
Yeah.
If it's a adoption schedule, for example, we in Fund 2, we have a couple 777-200s, which are converting from passenger to cargo. But those assets came off prior operators who took on new assets.
Yeah.
During the case of COVID, operators did retire assets all at once, but I don't think that's a little unusual.
Yeah.
Typically, as you said, you have a retirement wave. You're taking on 20 additional assets over the course of the next, call it 5 to 6 years, depending on the delivery timeline, the capacity of the OEM, et cetera. So that visibility gives you quite a bit of data points to really quantify your return stream and how best and most efficiently to transition those older aircraft into older fleets.
I mean, it's completely an interesting model to me. Just leasing in general, you can just use it as like a car example, right?
Yeah.
Like you lease a car, you're making a monthly payment to that particular dealership or whoever the manufacturer is or whatever it might necessarily be for a period of time, right? There's some length of time to it. And then you give the car back. It's the same thing in the airline space as well?
For us, yeah, we get it back. We love that when we get it back. We have optionality. So, a lot of what we do is maintenance arbitrage or green time arbitrage, where we have an asset that we'll put on wing with an operator. We know the timing or the duration of the life of that particular engine. We'll just use an engine as an example. For us, we in addition to a lease payment, we charge a maintenance reserve on top of that. So the operator's paying us to overhaul that engine once it comes off wing.
Yep. Which is required, right? Like to some extent, like it probably ran through a bunch of cycles.
Correct.
And now needs more cycles to actually,
correct,
fly.
And that's all readily available data. So we know this engine class has this amount of cycles, and that's all written by the OEMs in their manual book. So it's pretty detailed.
Yep.
So for us to put a pretty complex idea in a simple fashion, if I can buy an aircraft engine that I know is going to cost me $3 million to overhaul, and I put that engine to the operator that I purchased at $2 million,
yep,
I'll give him the engine for free.
Okay.
Right. I bought it for $2 million. He's going to pay me $3 million plus lease reserves.
Yep.
I get the engine back at the terminal lease. I just made $1 million. Plus, I have optionality on the metal. Now I can overhaul it. I can part it out. I can flip it. Or in many cases, I can sell the engine when it's on wing to a secondary buyer who's very happy making a 10 to 12% return, which is too low for our bogey. We're really trying to target 20% net IRRs or 2 times MOIC for our investors.
Got it. So you're not always just leasing the full plane, right? Like people think like, get the full plane, the fuselage, the wings, the everything. Sometimes it's just pieces of the plane that you're necessarily leasing to one of those providers.
Yeah, that's exactly right. I call them food groups. Have, within a plane, you have the fuselage, the airframe. You have the engines, both engines, so they could have different owners, different lessees.
Really?
The landing gear and the APU are really the main components. I mean, there's a lot of components in aircraft, obviously.
Of course.
But from a leasing perspective, we've always focused on, we like the engines. They're easy to move. Put them on a truck, ship them from one facility to another. Airframes a little more, leases tend to be longer.
Okay.
And also once you park an airplane in the desert for storage and you remove the wings, you can't just move that aircraft to some facility or to another operator. You have to bring in the engines. It's a lot of costs, a lot of operational, logistical headaches to getting that accomplished.
Yeah.
But it's easy to move landing gear or an APU.
Okay.
And all those different assets on the engine, on the aircraft have different limiters and cycles. So one engine could have 2,000 cycles, the landing gear could have 500 cycles, and the other engine has 1,500 cycles. So they're all coming off wing at different times.
Very interesting. Wow. Yeah. That's a lot of optionality between all of those different type of parts.
It is. And that's why we have so many different sub-asset classes, because when you do that across just those parts of the engine plus different variants across the years and different generations, it really provides a lot of more trading opportunity across all those sub-asset classes.
Got it. I mean, I'm going to have to ask you this, but everyone thinks like, man, like cars easy, like, right? Like it's airplanes, very expensive, very large, only certain amount of buyers. Like the risks are there. Like everyone sees when something goes wrong with a plane. We've seen a lot of that over the past year, I would say. I'm sure social media helps with that in terms of issues with planes, and obviously they go right after the manufacturer pretty much over that. I mean, how much risk is it from us as like an investor to invest in something like this and be an owner of a plane? Like, are we taking on huge amounts of liability with all of this? Is it worth it to do that? Obviously, this is an opportunity for you guys as investors, and you believe that it's a great way to generate a return for an investor through these arbitrages with these parts and cycles and fuselages and planes. But the big question is like, man, am I taking on a huge amount of risk if something goes wrong with one of these planes?
So 20% net returns, I think the risk is probably worth it.
Okay.
Keeping in mind we own the asset, it's a hard asset, it's trackable. We're not buying a piece of paper or some other derivative to get exposure to the asset. We actually own the metal.
It's physical. Like you own a physical asset. Like this is.
That's correct. I'm on flight.
There's value to it to some extent.
I'm a flight aware every day. And I put in the tail number, and I can see, hey, our 777's flying from Hong Kong to London.
Yep.
Which I think is kind of cool.
Yeah. It's very cool. Has someone else's name on the side of the plane, but it's your plane, which is kind of funny.
You got to come to our office, Matt. We have two big screens in the lobby, and one of the screens is just regular CNN or CNBC, whatever it might be for the investment guys. But we have a tower monitor dedicated to our assets, so you can see your global assets flying around the world, which is kind of
pretty cool.
Yeah.
It's pretty cool.
And they all have these specific tail numbers, so which is true with any asset in the class. You can put in the tail number, and it'll put in the type of aircraft it is, et cetera, and then you can see where it's flying, where it's flown, the time flown, et cetera. Cool. So back to your question.
Yeah, go to the liability side of things. Like, what if something happens to this plane, or like, give me an example of like what that looks like.
So from an investment perspective, I would say the biggest risk is duration risk.
Okay.
We think we're acquiring the asset at a good price, just based on our underwriting and knowing the market and their operators and what the current rates are. But there's always a possibility that give you one example. Born in the COVID era, we had the MAX issues, we had the war, and COVID.
Yeah.
So it was a very difficult aviation backdrop. Where capacity dropped dramatically, people weren't flying for a long time, et cetera. In that portfolio, we had a basket of narrow body conversions. The result of all that was that the duration of those conversions and placing on lease took longer than expected.
Yeah.
So the IRRs will suffer. Actually, we're still going to make good money, but the MOICs will remain about the same. So the duration of your investment could be extended on some particular issue. Credit risk is also a big component.
Correct.
We need to make sure we can get paid. So the constant evaluation of the companies, and before we do a deal, we look at the financials, et cetera. Is Tom in Belgium going to be able to afford this brand new 777, or not brand new, but in our case, out of shop 777? Yep. We need to assess that risk as well. Correct. We've been pretty good. Over 120 assets that we've invested in since inception. We've had to reposition less than 20. In that case, we made money on all of them. So I think that goes back to us really focusing on 5 to 6 assets at a time, not all 200.
Yeah, of course.
We'll tiptoe into an asset, and then once we get comfortable, we'll leg into the asset. And in the meantime, we're having conversations with other operators who are flying that asset or adopting that asset. So if we do need to reposition something from one operator to another, we typically have a place to put that particular plane or engine or landing gear, et cetera, which is good. From a liability perspective, in terms of a non-scheduled event or an incident, a bird strike, et cetera, there's any number of these things that can happen. Insurance is a big thing in the business, so all of our operators have their own insurance coverage. So they'll cover the asset. The managed reserves obviously cover some of that as well. Yeah. And on top of that, we have an own umbrella.
An umbrella policy.
And on top of that, we have our own umbrella policy as well to cover any overages and expected costs that might happen.
Got it. Wow. Yeah. It's definitely interesting.
And also the MROs have some liability as well, right? They're the ones repairing the asset. Every little nut and bolt
Yep.
on this on aircraft or engines, has a serial number. Who produced it, who flew it, how long it's been in the air, who repaired it, who tagged it, etc.
Yeah.
So it's and for us, obviously, having transparency into those logs and into that particular asset, the life of that asset is really important for us. If we purchased an engine with not a clean record or log, it'd be harder for us to put that to a customer.
Got it.
Particularly some of the, we've had engines on lease to Asiana, the 747 on lease to ASL, et cetera. We have a couple engines on lease to Air New Zealand via MTU. If those engines didn't have clean records or were inspected regularly by an authorized party, they would never take that engine into their fleets.
Okay. And what do those timeframes look like for leases, or do you prefer leases, or do you prefer sales, or do you prefer parting them out, or like how does that kind of process work? Like how do your food groups work?
We're completely agnostic to that.
Okay.
As we are to asset type. One, if the spread's there, we love it. But back to your question, we're just trying to make that spread. And what's the best way to monetize that spread? We know what the bogey is. We know what the MOIC bogey is, whether it's a lease, a straight flip, a combination of both. For us, just like any investor, we're trying to make money as well for our investors and ourselves and have a good product. And we want to get money back as fast as possible. So wherever the most efficient way to monetization is, that's what we'll pursue.
Got it. How big is the ability to maintain relationships or have relationships with people that are, or airlines that are leasing from you, or even the OEMs, like where you're buying from potentially? Like what does that look like in terms of a marketplace? I'm assuming that some of the folks that you're working with that are leasing your product are coming to you and be like, hey, we're looking at this into the future. Can you find us something in this space? Does that happen pretty regularly? Do those the types of relationships that you guys want to have?
I would say there's two stages of that. The initial relationship building, we don't get those questions, right? But we're out there trying to build relationships with these operators.
Yeah.
There's any number of investment conferences for the aviation segment of the world.
Yeah.
There's a big one next week in Dublin. So we have a team internally, the marketing team, a team of 4 individuals, and they're constantly out there talking to operators, fleet planners, MROs, what's coming to shop, what do you need, what are you seeing?
Yep.
And once you develop those relationships over time, you get those repeat phone calls. One of the big things for these guys, that is for an operator, they want to make sure their planes are flying.
Yep.
And they want to maintain their operating certificates. So if you and I can continuously provide an asset to the specifications that they want and on time, they'll keep coming back.
Got it.
Yeah.
So they just don't want planes on the ground.
Very costly.
Got it.
Yeah. It's like getting any planes, even little small private planes. They have to fly. Planes sitting on the ground.
To get use out of it, you have to fly it.
You have to fly it.
Even though it's costly to fly.
There's cost, but there's storage issues. I mean, if you're flying, you're generating revenue, right? So you're putting packages on a plane or cargo. If it's just sitting there, you still have cost, maintenance costs associated with that.
Yeah.
So it's really want to get those things in the air.
Speaking of cargo, like tell me a little bit. I know this story a little bit, but tell me a little bit about the conversion thing. You don't see that as much with regards to other airplane lending and leasing folks, like taking that opportunity. Give me a little bit about like how that story came about, like how you identified that, or how did Flight Lease identify that, and then why that particular sub-asset class, as you kind of described it, because I think it's fairly unique. I could be wrong. You could tell me I'm wrong, but it seems to be pretty unique.
Yeah, we think it is. It's again, it's just from our thematic view on the cargo space in general. There's a whole retirement wave of less efficient aircraft. 747-400s, MD-11s. 74 has 4 engines.
Yep.
MD-11 has 3 engines. Expensive to fly, less fuel efficient, and it costs more for operators. The margins are much smaller.
Got it.
If they can transition to, let's say, for example, the 777-200 LR, which we're converting from passenger to cargo, it automatically on day one improves their operating margins by about 15%. They're getting an asset that can fly almost as far, but it's much more fuel efficient. And at the end of the day, they're just going to make more money on their operating routes. So our thesis with that particular transition in Fund 2 was we knew this retirement was coming. And we knew that operators would want to have a more efficient aircraft, and the logical replacement for that was the 777-200LR. In addition to that, we know that Boeing, who produces this particular cargo plane, stopping production on the current cargo variant in favor of the 777X, which, by the way, has been delayed now for another couple years. So to fill that void, we went out with a partner of ours in Texas, and we bought up the conversion slots at a firm called Mammoth, based out of Texas, which is backed by Fortress, to convert, for the first time ever, a 777-200LR from passenger to cargo. So in that case, it was we took on more risk. We didn't have the contract in, contract out, but we knew that retirement was coming.
Yes.
So we felt comfortable that we were acquiring the asset at a severely discounted price.
Really good price.
Very good price. These aircraft, brand new, cost $200 million off the factory line. And if you wanted one, you have to put it the order in and wait. It could be a year or two. So if we're able to go out and acquire the asset for significantly less capital, put the conversion in, and still be well under that mark, and then make a 20-30% return on the sale, we felt really good that there would be demand for that asset. And it's kind of borne out. Of the 8 777s we have in Fund 2, we've already sold 6 of them. Yeah. We've received progress payments on all of them, and we're expecting another $100 million plus in proceeds from final SEC approval into early next year.
And why isn't
early this year, excuse me.
And why isn't anyone else doing that? Right.
Well, this was I think other guys looked at this, but this is the first time this is being done.
Got it.
So there's only 2 conversion shops really that matter globally: IAI in Israel and Mammoth in Texas. IAI chose to convert to 300, which is a longer variant of the 777. Same engine, the same landing gear, same wings essentially as the one that we're converting. But it became a much more adopted aircraft for passengers because it could hold more people. It's a little bit longer.
Got it.
The 200 became the cargo workforce of the industry. They made a couple hundred of those, but they only made 62 of the passenger variant. From our analysis, we thought it was a much safer risk to take an aircraft that was originally converted as a cargo plane and just convert it back from passenger to cargo. So we're doing a simple conversion from one variant, from one cargo passenger back to cargo. Let me repeat that. So we're doing, from our estimation, a much less risky endeavor was to transition or to convert the 200LR 777 Boeing from a passenger to cargo because it was made as a cargo plane.
Yep.
And we expect final SEC approval on that aircraft in the next couple of weeks. We've had test flights already, and obviously customers are liking the asset, and we've already sold some of them. So it's been a really good trade.
That's fantastic. Well, I want to thank you for your time. I hope our listeners and viewers have got a little bit of a deeper dive into airplane lending and leasing, and as an asset class and sub-asset classes, obviously we discovered, and obviously the return and the difference as it relates to traditional asset classes like stocks and bonds and equity. So I want to thank you for spending some time with me and walking us through that asset class.
Man, it's always a pleasure to see you, Matt. You know that. Yeah, I appreciate your time, and let me know if you have any questions, anything I can do.
Definitely. Thank you.